AST stock set to explode. My next 10x penny stock. It's a pitch for Strive Inc. as a hyper-levered Bitcoin treasury play.
Excellent. And with a promise like 10x right there in the title, we need to talk about supercharging that hook.
Okay, so the material, it hits us immediately with those key figures. You've got the 7,525 Bitcoins held against, a $1.08 stock price. That contrast is massive.
It is, but I think the core investment thesis needs to be strengthened by really quantifying that leverage right up front. The weakness here is that the argument kind of relies on the viewer to subjectively do the math.
Right, it dilutes the immediate shock value.
Through Bitcoin per share proxy, you need to structure the argument around that metric.
So make the gap explicit.
Make it explicit. For a concrete example, calculate the Bitcoin value relative to the market cap before you even bring up the financing. You could state explicitly, what percentage of the share price is backed by just the Bitcoin. Make that gap undeniable, instantly.
Moving on, the script lays out this powerful sequence of events. You have the financing, the Bitcoin treasury, and then the Semler merger. These are huge fundamental shifts, but they don't quite feel, connected to the explode prediction.
That's it, exactly. The argument for the short squeeze, it currently feels like a separate section that's just tacked on at the end.
Yeah.
It doesn't feel like the natural consequence of all this news. And that's the weakness. It treats that 38.58% short interest as just another market dynamic.
Instead of the outcome of a bet that's just gone sour for the shorts.
Precisely. So we need to create a structural link. The suggestion is to frame the financing and merger not just as good news, but as the direct, inescapable trap that forces the short sellers to cover.
Okay, so how would you actually rephrase that?
Well, for a concrete example, I'd rephrase that entire final section to emphasize that these short positions were established before the company pulled off a $149 million oversubscribed offering and before they acquired an established operation with Semler Scientific.
Ah, okay.
It transforms the squeeze from, a market coincidence into a logical mandated adjustment.
Okay, so something I really liked was how the writer proactively addresses that huge Q3 loss, the $192.3 million. They were smart to distinguish the operational loss from the $179.3 million in non-cash items.
It is smart, but if you're going to claim this is a deep dive report, you can't just wave away almost $180 million.
Right, it feels a little too brief, maybe.
And that's the weakness. The risk analysis is too general. It treats that huge non-cash figure like a generic warning instead of analyzing its specific cause, which sort of undermines the claim of rigorous due diligence.
So, reinforce the credibility there.
Yes. The suggestion is to just dedicate a single, pointed sentence to identifying the technical source of that charge. You have to show why that number exists.
And what would that look like?
You could add language that specifies, what kind of corporate event leads to this size of charge. For instance, state that this non-cash loss is likely attributable to goodwill impairment related to the pre-merger valuation. Or you could call it a crucial mark-to-market accounting adjustment. That little bit of specificity makes the whole script feel authoritative.
This has been some high-voltage feedback, so to summarize, the path to maximizing this 10x script really needs 3 actions. First, calculate that explicit Bitcoin per share value to maximize the immediate impact.
Second, you want to structurally link that strategic news directly to the short squeeze pressure. Make the covering the actual climax of your story.
And third,